Attention retirees, a frozen transfer can leave your grocery, medicine, and rent money stuck for days. Last Thursday, a 72-year-old named Patricia in Milwaukee, Wisconsin learned that the hard way. Her bank flagged a routine payment and locked access to $9,140 overnight. She stared at her kitchen table, holding two unpaid bills and one shaking hand. If all your money sits in one place, one glitch can suddenly feel like disaster. Let me be honest with you. People who stay informed usually protect more of what they worked decades to build. People who wait for the evening news often hear warnings after the damage starts. Which group do you want to be in when money gets harder to reach? Subscribe right now so you don't miss the next urgent update. Let me tell you about Patricia. She's 72 years old and lives in Milwaukee, Wisconsin with her rescue terrier. She spent 30 years driving a school bus and never missed a payment. Every month, her pension lands in one checking account at the same bank. She liked the routine because it felt simple, safe, and easy to monitor. Her total balance that week was $31,480, all under one roof. Then a payment for a roof repair triggered a fraud review. The contractor asked for a $4,380 deposit before starting work that morning. Patricia approved the payment through her phone, then watched the screen freeze. Minutes later, her debit card stopped working at the grocery store checkout. She felt embarrassed, then scared, then suddenly very old and very alone. The cashier waited while Patricia whispered that something was wrong with her account. The next call made everything worse. Customer service told her the review could last up to 48 business hours. That meant groceries, medicine, and the contractor deposit were all suddenly uncertain. She had cash at home, but only $86 inside a coffee tin. Her daughter lived 3 states away and couldn't arrive until the weekend. Patricia kept saying, "But it's my money," and nobody could help immediately. Here's what frustrates me. Patricia did everything people are told to do and still lost control temporarily. She wasn't reckless, confused, or chasing some strange internet investment promise. She simply depended on one access point for every single monthly need. That's the part too many experts skip when they talk about safety. Access matters just as much as account balances when life hits sideways. Patricia spent the next week changing her setup. She opened a second account at another institution for monthly essentials. She placed $6,250 in a short-term treasury option for backup liquidity. She also kept $1,240 in a small home safe for urgent purchases. Now, if one system fails, her whole month doesn't collapse with it. That shift didn't make her rich, but it gave her breathing room. Quick pause for me. What state are you watching from right now? Drop your state name in the comments before we keep going. Rules and options can vary depending on where you live. Your comment also helps more retirees see this before trouble reaches them. Now let me tell you about Thomas. He's 74 and lives in Charlotte, North Carolina, near his youngest granddaughter. He retired from electrical work and still fixes lamps for neighbors on weekends. Thomas keeps careful folders, pays bills early, and hates owing anyone anything. He believes spreading money around was unnecessary if his bank looks stable. At the start of winter, he had $286,430 between savings and checking. One afternoon, Thomas heard his regional bank was cutting branch hours again. That alone didn't scare him, but the timing bothered him deeply. He had a hospital payment plan, a property tax bill, and travel booked. His monthly obligations added up to $7,965 before Christmas even arrived. He tried to move part of his balance, but the transfer stalled. The message said the request needed additional review because of the amount. Thomas drove to the branch and found 20 people already waiting outside. A manager explained the bank was having temporary systems issues after a merger. Nobody could promise when large outgoing transfers would fully process again. Thomas felt anger rising because his bills were not experiencing temporary issues. By that evening, a tax deadline and a medical payment were both closing in. He wasn't broke, but he suddenly couldn't direct money where it needed going. This makes me angry. Retirees are told convenience is everything, then punished when convenience breaks. No one warns you that one institution can create one giant bottleneck. Thomas learned he had $36,230 sitting beyond the usual insured threshold there. He had never reviewed the limit because nobody pushed him to. He assumed a familiar logo meant permanent protection without any follow-up work. A planner friend helped him reorganize the following Monday. Thomas moved part of his cash to another bank and a credit union. He placed $18,700 into rolling short-term government securities for easier backup access. He also linked one account only for bills and another for emergency needs. Today, Thomas says the best part isn't yield or paperwork or percentages. It's sleeping without wondering whether one frozen transfer could wreck his month. Then there's Karen in Seattle, Washington. She's 70, widowed, and spends Sunday afternoons writing letters to her grandchildren. Karen was always careful with money and avoided anything that sounded flashy. Most of her liquid funds sat in one brokerage cash sweep account. She liked the app because everything appeared on one clean screen. At the time, she had $42,650 ready for bills and home repairs. In late January, her furnace quit during a cold snap. The replacement company needed $7,915 before installation could begin the next morning. Karen tapped her account to move money, but the transfer window had closed. The brokerage said the linked bank could take extra time to settle. She wrapped herself in blankets that night and cried from pure exhaustion. Not because she lacked funds, but because access moved slower than the emergency. The next day, Karen borrowed from her daughter to cover the installer. That moment hit her harder than the actual furnace invoice ever did. She had worked for decades and hated needing rescue over a timing gap. Later, she discovered another issue that few retirees think about often. If markets fall hard, people sometimes sell long-term holdings for short-term needs. That can turn a temporary inconvenience into a much larger financial wound. Karen chose a different path after that miserable week. She built a simple reserve equal to 4 months of normal expenses. Her target came to $16,940 spread across cash and short-term government holdings. She also wrote clear instructions listing account numbers, due dates, and contacts. Now her daughter knows exactly what exists and where to find it. Karen says that written plan restored her confidence more than any forecast ever could. Let me ask you something. Has anything like this ever happened to you or someone close? Comment yes or no, so I can see how common this really is. Your response helps this message reach more people who need practical protection. Take 5 seconds and type your answer before moving on. Let me bring in George from Jacksonville, Florida. He's 76, a retired truck driver, and he still wakes before sunrise daily. George trusted his bank because he'd used it for over 40 years. He kept nearly everything there, including the fund for his prescriptions and insurance. He figured loyalty would count for something if conditions ever changed. His accessible balance last spring sat at $58,230. Then his debit card stopped working during a routine pharmacy visit. A fraud alert had frozen the card after an online login attempt. George didn't even know the app password because his grandson said it. When customer service asked security questions, George couldn't answer one correctly. The medication total was $612 and he had only $43 cash. He drove home angry, embarrassed, and suddenly distrustful of every digital promise. The trouble didn't end there. His insurance draft was scheduled for the next morning from the same account. A missed payment would have triggered a lapse notice and reinstatement paperwork. George spent 6 hours on hold and got 3 different explanations. One representative suggested waiting 2 business days for automatic review completion. For someone who needed medicine now, that answer felt almost insulting. George eventually paid the pharmacy using money borrowed from a neighbor. That part still bothers him more than the frozen card itself. He says pride can crack fast when access disappears at the wrong moment. Afterward, he built a backup system with old-fashioned discipline and modern caution. He keeps $1,500 secure at home, a second debit card elsewhere, and duplicates of key documents. He calls it boring preparation, and boring preparation saved him more than once. Not every story ends neatly, though. A retired couple in Denver delayed changes because they thought warnings were overblown. When a payment delay overlapped with a market dip, they sold investments early. That rushed decision cost them $11,460 they likely could have avoided losing. The lesson isn't that banks are evil or markets are doomed forever. The lesson is that pressure forces bad timing, and bad timing is expensive. Real quick for me. If this is helping you think more clearly, tap the like button. That tiny click helps this reach people living on savings and fixed income. More retirees need practical information, not vague reassurance or scary headlines. It takes 2 seconds, and it matters more than you think. By now, you can see the real issue. This isn't only about bank failures or dramatic television countdowns. It's about concentration, access, timing, and the false comfort of one simple login. A system can look calm while smaller pressure points quietly build underneath. Higher rates, tighter lending, and stressed property loans don't announce themselves politely. They show up later in delays, restrictions, and expensive decisions made under pressure. The good news is you don't need perfect predictions. You don't need to guess the next headline or market swing either. You need a setup that lets you stay steady while others panic. That means money for daily life should never depend on one doorway. When you build several safe pathways, fear loses much of its power. Hope starts when you realize preparation can be simple and deeply practical. Here's exactly what you need to do. I'm giving you 6 steps, and each one is straightforward. You don't need to finish everything today or even by tomorrow afternoon. But start with step 1 this week and keep moving forward calmly. Write these down somewhere your spouse or trusted person can find. Ready to begin and protect your flexibility before stress shows up? Step 1. List your true monthly living costs using real numbers, not rough guesses. Include food, medicine, utilities, insurance, transportation, and minimum debt payments. Then multiply that total by at least 3 and possibly 6. That number becomes your access cushion, not your investment growth money. If your monthly bills equal $4,210, build toward $12,630 or more. Knowing the target removes confusion and turns worry into a concrete plan. Step 2. Check how much money sits at each institution under your name. If one bank holds too much, consider splitting balances more carefully. Insurance protection usually depends on ownership type and institution, not your intention. Call the bank and ask plain questions until the limits are clear. Write down the answers, date, and representative name for your records. Don't assume old account setups still fit your life today. Step 3. Create 2 levels of emergency access instead of just one. Keep a modest amount of secure cash for short-term disruptions at home. Then keep another reserve in a highly liquid, lower-risk place you trust. Many retirees use a second bank, credit union, or short-term treasury ladder. The point is simple access, not chasing every extra dollar of yield. Separate pathways give you options when one channel suddenly slows down. Step 4. Automate your most important bills from an account built only for essentials. Use another account for travel, gifts, hobbies, or larger occasional purchases. That separation helps you see quickly whether core expenses remain fully covered. It also limits the damage if one card freezes or one login fails. When you call for help, you'll know exactly which account needs attention. Clarity speeds decisions, and speed matters when deadlines are close. Step 5. Build a one-page money map for your household this month. List institutions, account purposes, contacts, due dates, and document locations clearly. Add passwords only if stored safely through a secure method you trust. If something happens to you, a spouse or child needs guidance fast. That page can prevent missed premiums, late taxes, and frantic guesswork. Prepared families make better choices because they aren't starting from total confusion. Step 6. Review your setup every 90 days instead of once a year. Life changes quietly through new bills, health costs, subscriptions, and market movement. A cushion that worked last spring may feel thin by winter. During each review, ask one question. Could I cover 60 days calmly? If the answer is no, strengthen the weak spot immediately. Small corrections now are much easier than emergency fixes later. Think of someone in your life right now. Maybe it's your brother, your neighbor, or your oldest friend. Maybe it's the widow down the street handling finances for the first time. Share this video with that person before the day gets away from you. One message today could save them from a painful mistake later. There's another piece people often overlook. Preparation also protects your emotions, not just your account balances. When you know bills are covered, market swings stop controlling your mood. You stop making choices from fear, embarrassment, or pure exhaustion. That emotional stability may be the most valuable asset of all. Clear minds usually make smarter money decisions during stressful weeks. And let's be honest about something else. Convenience has trained many people to believe instant access is guaranteed forever. But apps crash, cards freeze, systems merge, passwords fail, and reviews drag on. Most of the time those problems get fixed, but timing still matters. Your landlord, pharmacist, and insurance company won't pause because technology stumbled. That's why preparation must be built around reality, not advertising slogans. If you're married, make this a shared conversation. One spouse often knows more details while the other handles daily errands. That imbalance can become dangerous during illness, grief, or sudden confusion. Sit down together and review where money sits and how bills get paid. If you live alone, share key instructions with one trusted person. Silence creates risk, while simple clarity creates control. If you're thinking, "I'll deal with this later," please don't. Later is usually when the branch line is long and emotions run hot. Later is when the transfer stalls the day before insurance drafts. Later is when the account password nobody wrote down suddenly matters. A calm afternoon is the best time to build a calm plan. Use ordinary days to prepare for the few days that won't feel ordinary. Let's review what we covered. You saw how retirees can face real trouble without losing money permanently. The danger is often delayed access, poor structure, and forced bad timing. You also saw how one account, one card, or one login creates weakness. Across thousands of households, the same quiet risk keeps showing up. You now know how to reduce it before it becomes expensive. Here's the final punch. The people who suffer most usually aren't the least responsible ones. They're often the ones who trusted the system to stay simple forever. One frozen card, one delayed transfer, or one missed deadline changes everything. But one backup account, one written plan, and one reserve can change it back. Small actions done early beat heroic reactions done late every single time. If this helped you, here's what to do next. Subscribe so you catch the next update before problems spread wider. Share this with someone who lives on savings, pension income, or Social Security. Comment with your state or your situation because I do read them. Your support helps this reach more people who need practical guidance fast. And that matters when even short delays can cost real money. Important disclaimer. This video is for education only and isn't legal, financial, tax, or medical advice. Every person's situation is different, and state rules can vary widely. Please speak with licensed professionals before making major decisions about your money. That may include an attorney, CPA, financial advisor, banker, or healthcare provider. What helps one household may not fit another, so get advice for your case.